for taking the time to join us today. The JPMorgan Japanese Investment Trust is a best ideas investment trust looking for the very best companies in Japan in the long-term view. So we're very much focused on the companies, and I'm going to give you some very hopefully exciting examples of how we invest later on. But to start with, I do just want to begin with a few comments about the trends we see in the market overall right now in Japan. I think we really have a very benign backdrop. It's a very good environment, I think, for investing at the moment. And if you could go to the first slide, Dave. There's really a combination of factors at play here. First is we've got a new stable government here with a big majority. I'll give you some more details about that, but that's a very nice environment to be investing in. Corporate earnings here are strong, have been for a while. They're recovering quite visibly from the downturn we saw due to the coronavirus. The coronavirus picture in Japan is really, I think, right now, very different from what you see in the rest of the world, positively right now. I think in stark contrast, the image that many of you may have from watching the Olympics over the summer. So I hope to give you a little more data on that. And combined with that, we have beneath the surface what I think is nothing short of a corporate governance revolution going on in Japan, happening in its own speed and its own kind of Japanese way. But still, the progress in this area has been very encouraging over the last few years, and I think will continue to be a big driver of the market in years to come. One point that is not on this slide that I did just want to highlight, because I do think this again is a major difference in Japan versus what we see in the rest of the world, is that, you know, whether it's, I mean, I'm sure you're all aware from reading the newspapers, certainly when we speak to our colleagues, whether that be in London, New York, or elsewhere, there are clearly inflationary pressures in many of these countries. Particularly now you see labor shortage and wage hikes as a result. But in the meetings that we do and what we see on the ground, we really see very little of that here. In fact, I go as far as say almost no wage pressure in Japan. So yes, of course, we do see the signs of some inflation in terms of commodities. So you see it in gasoline prices or utility bills. But overall, I did just want to highlight that we don't have the same concerns about inflation as maybe you might have in other parts of the world. So you take that all together, it makes for quite a nice backdrop looking over the next few months in the macro in Japan. So just to fill that out a bit more, if we first go on to the next slide about politics in Japan. Now, as you may be aware, we've just had an election here. The ruling Liberal Democratic Party under their new leader, Fumio Kishida, won an absolute majority. You know, it was really quite a storming victory for the incumbent party. And Kishida represents continuity. His policies are basically the same as his predecessor, Suga, and his policies were basically the same as his predecessor, Abe. And so Japan continues very much on a steady course. We don't see any really significant opposition at all. And the ruling party has the majority to be able to push through whatever reforms they want. And we'd expect continuation of the key areas. And that would be things like pushing with digital transformation in Japan. Still, Japan very far behind other countries when it comes to making use of online systems, or pushing ahead with Japan's renewable energy or changes to Japan's energy mix, which I think need to happen. So we don't really see any changes in any of these areas. And now that the state of emergency has been lifted in Japan, which happened a few weeks ago, which was due to coronavirus, the economy should start to normalize. So it's really a tale of recovery. The one factor, I guess, that we need to think a little bit more about is what's happening in China. China is Japan's biggest trading partner. The Chinese economy is slowing down right now. And there are also some changes in the competitive landscape there, which I think perhaps we could go on to address a bit more in questions. But that's the one thing I think we'd spend a little bit more time considering. If we move on to the next slide, this looks at the progress on the vaccination program in Japan. So Japan was very slow to get going on coronavirus vaccines, but once it did start, it has made really remarkable progress. As I speak to you today, we are well over 76% of the population fully vaccinated. That is one of the highest levels of any country in the world now. And we can see the problems that we now have in continental Europe, where some of the vaccine rates are rather lower. And so Japan is at a very different stage now. Not only that, but the number of cases per day here is extremely low. Today in Tokyo, the city, which is the biggest city in the world, remember, close to 30 million people live in Tokyo, it reported 6 cases. That's not 60,000 or 6,000 or 600, it's just 6 coronavirus cases. So at least for now, things are very different here to the rest of the world. Now, Japan hasn't really managed to open its borders yet, which would be the next step, something that I'm certainly very hopeful for, because I quite like to see my family sometime. But I think the recovery here has been remarkable, and Japan has made very good progress in the last few months in terms of vaccination. And the other point I would just make as a point of difference about COVID situation here is that wherever I go, people wear masks in Japan. That doesn't matter whether I'm on the metro or in a shop or walking in the streets or walking in a field or walking in a mountain or anywhere. People wear masks here all the time. And that, I think, again, is quite a big point of difference with what you see going on in Europe and North America. Moving on to the next slide, I'd just like to spend a little bit more time talking about the progress in corporate governance in Japan. Now, when I started my career about 20 years ago, we'd have been probably not having slides on corporate governance, and certainly we tried to de-emphasize it as a reason to invest in Japan because we were so far behind the rest of the world. But actually, Japan is catching up relatively fast and making really significant, long-lasting changes. The background is that the Prime Minister Abe, he put into place a corporate governance code and a stewardship code. Companies started to change as a result. So you can see on the right-hand side of the slide that now almost 60% of companies have 1/3 or more independent directors. It's a dramatic change from where we were 5 or 6 years ago. You can also see on the left-hand side, continual rises in dividends and share buybacks. In particular, I'd highlight that I see last year, where actually it dropped a little bit, as being a major success. During the coronavirus, if you look in the UK or Singapore, continental Europe, many companies could not pay dividends or were told not to pay dividends or do buybacks by the government. We saw none of that here. And I see that as being a major test of the policies in terms of the progress that Japan's been made, because companies here had a real excuse to say, we said we were interested in corporate governance change, but actually, there's a crisis going on now and we're going to step back from improving our balance sheet efficiency. And that's not what happened at all. And so it means that when I talk about the corporate governance change here today, I'm much more confident about saying that this is a ship that has really set sail and will continue in its path. I'm much more confident to say that now than I was a couple of years ago. And just to put that into, you see this on the next page, which looks at how share buybacks are changing over time. You can hardly even notice, here we compare the buybacks which are happening each year since 2017, you could hardly even notice that we've gone through a pandemic and major global recession in terms of the progress that is being made. So I just finished by saying on this section that if there's just one reason to invest in Japan on a multi-year view, it is that we think the corporate governance changes are at an early stage. We've got a very long growth runway ahead. And as things continue to improve here, it can be a big driver of the market over not the next 1 year, 2 years, but over a multi-year period. I'll hand over to Miyako.
Thank you, Nicholas, and hello, everyone. So I will talk a bit more on the trust from the next slide, please. So now on the trust, this is an unconstrained strategy looking to invest in the very best ideas in Japan. We are bottom up and we can go across the market cap spectrum. And we only invest in ideas where we have very strong conviction over the long-term outlook. Now, as a result, the trust has a strong bias towards growth and quality names. Now, the trust has a much higher ROE, ROA, OP margin, earnings growth rate compared to the index. Also, our holdings have very strong balance sheets, excellent cash flow generation. It's also an ESG integrated approach, and the trust receives 5 globes from Morningstar for sustainability and also a silver rating. Now, another important thing to note about us is that we have a large team of 25 Japan equity dedicated analysts and portfolio managers on the grounds here in Tokyo. And we think this is very important. Now, Japan is the world's 3rd largest economy, but the Japan equity market is very poorly covered by the sell side. For example, 70% of the market has less than 3 sell-side analyst coverage. Now, the equivalent figure in US or Europe is more like 40%. And coverage particularly tends to fall off in the mid-small cap space. Now, we think this creates a great opportunity for us active managers. And with a large team on the grounds here in Tokyo conducting over 4,000 company meetings per annum, we think we can be well positioned to conduct thorough research on our own and search for the hidden gems with strong competitive positions. Now, if I can take you to the next slide. So briefly on our process, our investment process consists of 2 steps. Now, first, we have what we call a strategic classification framework. And this is the step where we address the key question, is this a business that we want to own? So this is before we even think about the current valuations. It's really addressing the attraction of the business model on a long-term view, regardless of the current share price. In this process, we classify each and every company into premium, quality, or trading rating based on the economics, duration, and governance of the company. Now, the strategic classification is really the most important part of our process, and we want to focus our investments in premium and quality names with good financials, strong industry outlook, clear competitive advantage, good governance, and ESG. And there aren't that many premium and quality companies out there. Now, the trust is around 90% invested in premium and quality names. But if you look at the overall market, only around 1/4 is premium and quality rated, and the remaining 75% we all rate trading. Now, only after the strategic classification process, we then look at valuations to consider, do we want to buy this company right now? Well, if I can take you to the next slide, where are we actually invested in? Now, we're bottom-up stock pickers, but there are certain areas where we tend to find a lot of good ideas, and we can group them together like this, just to help give you a better image of what the trust looks like. So just to highlight a few themes here, internet makes up around 36% of the portfolio. Now, Japan is good at and advanced in many areas, but as Nicholas mentioned, the internet just isn't one of them. And in fact, we're years behind the US or UK when it comes to things like easy penetration or cashless payments. But the point is that we are traveling in the same direction, just with a time lag. So we can look at what's happening overseas and think about potential beneficiaries here in future. Now, examples of investments include the #1 apparel e-commerce platformer Zozo, which is similar to ASOS or Zalando. Base, which is a company that provides a platform where you can quickly set up your own online shop like Shopify. Also Free, which is the top cloud accounting service provider like Xero. Now, other areas of focus include factory automation. Now, Japan is home to many global #1 factory automation names in their field. Pure plays like Keyence #1 in sensors, SMC #1 in pneumatic equipment. Aging population. This is obviously a negative theme for the overall economy here, but there's also a handful of names that can actually benefit from this trend, and that creates a great investment opportunity for us. And we invest in companies like Nihon M&A Center, which is the #1 M&A matchmaker for mid and small size enterprises with no successors. Now that targetable universe is only going to grow over time. And also environment is also an increasingly focused area for us, with the government's commitment to reach carbon neutral by 2050. Our energy mix in Japan is just completely wrong here, with still 1/3 reliance on coal and renewables ratio lagging that of other major economies. And this needs to change. Now, we'd like to give 2 stock examples here within our holdings, so I will hand it back to Nicholas to introduce the first holding.
Thanks, Miyako. If we go on to this slide, thanks, Dave, to the first example. This company is called Recruit. It's currently the biggest position that we have in the trust, at around 7.5% of the trust. It is the global #1 operator of online job website. The website it operates is called Indeed. That's the #1 in the UK, it's #1 in US, all over Europe, in Japan. It also operates a job review website called Glassdoor, and I hope that many of you are familiar with both of these companies. It's quite a typical example in that these are now very well-known websites, but very few people actually know that they are owned by a Japanese company. I want to talk a little bit about the journey of that stock into the portfolio and how it is that we invested, and then why it is that we have such a large weight within the stock. Now, this is a company that, although it's been around for a while, it only listed in 2014. At that time, nobody spoke about these job websites that I just mentioned, because Recruit largely was a domestic company. Now, it has some really great businesses. For example, it has a real estate or property website, very similar to Rightmove in the UK, so the #1 position there, and a number of other very competitive domestic businesses, but they didn't have anything really global at that time. So we were very interested when they listed, and we met, as is often the way, the president of the company, directors, investor relations. We asked other companies we met what we thought about their service. But as time went by, what became clearer was that this company, Indeed, which they only acquired in 2012, was becoming a bigger and bigger earnings driver, to the point at which it is now by far and away the biggest driver of their earnings. Now, because of these leading positions that the company has, we have a quality rating on the company until we went through the pandemic. Now, the pandemic was a very big test of this business model, right? How would the company perform when there was no hiring going on at all? Would they continue to invest in the business? And our assessment is that they've come out with flying colors, that they invested heavily throughout 2020. And as we've seen the recovery in 2021, the dividends have come through with huge market share gains. In fact, when we and Miyako were speaking with the director just last week, I think we both came away with the conclusion that they are now pretty much the #1 place to hire employees for very large corporations. That means people like Amazon, when they're trying to staff an entire warehouse with hundreds or even thousands of people, that because Recruit is now the default site, that is where they will go to. And what I find very exciting about Recruit is that when we compare it, as we do on the right-hand side, to Facebook, Google, or Spotify, you can see quite a similar trend in how its market share is growing. And it's very exciting that we have one of these types of businesses in Japan. It's also very exciting that it has a quite different culture. In fact, a few months ago, me, Miyako, and the rest of the team had a meeting, a one-on-one meeting with the new president of the company, Mr. Idekoba, who's actually based in Austin, Texas. That's very unusual. He's just 45 years old, very dynamic, really driving the company forward. And so, we really feel like this can be a company that people will speak about in the same breath as maybe Google or Facebook or others in the future. And that's why, we have it as a big position. Because it did so well during the pandemic, we had the confidence to upgrade it to that premium rating, which we only give that rating to 14 companies in Japan. And so we think the outlook is very good from here.
Okay, the stock that I would like to talk about is called Free. Now, Free is a quality rated company, and it's the #1 cloud-based accounting service provider in Japan. So it's basically similar to Xero overseas. Now, I mentioned in our theme slide that internet is an area that Japan lags other major economies, and cloud accounting systems is also one of them. Now, as you can see on the right-hand chart of this slide, in Japan, the penetration of cloud accounting software among small businesses is only around 20%, whereas in the US, it's close to 50%, and in areas like Australia or New Zealand, it's over 60%, 70%. Now, Free's main targets are mid and small-sized enterprises, but actually around half of these businesses don't even use software yet and are still doing this off an Excel spreadsheet. So you can really see that we're coming from a very low base here. But it's not like Japan is going on a completely different path. We are moving in the same direction, just at our own pace. And we believe that penetration here will catch up over time. So we expect Free to benefit as the market penetration grows. We also expect them to continue to increase their ARPU as well through additional features and functions on top of their main fixed fees. Now, looking at the competition, Free is #1 in cloud accounting with an estimated 55% market share. The key focus at the current stage is how quickly they can take share from existing packaged software players. And those packaged software players are really struggling to shift to a software as a service-based model. And that's really because for these legacy players, that would mean that they need to cannibalize their profitable traditional businesses and also hurt their relationships with existing channels like electronic retailers. But we've been investing in Free for around 1.5 years now. It's still a young company. It was established 9 years ago. It only listed in late 2019. Now, the company is still in investment phase, but we believe that it will generate strong recurring revenue going forward, along with improvements in profitability. And we always look out 3 years, 5 years, 10 years when we consider investment. Now, on the history about how we invested in this name, we first met Free when the company was unlisted. The company IPO came soon after, and we didn't buy it right away at the IPO, but we watched for a few more quarters to see how the company executes, and different people within our team met their management. Then as we grew more confident with the strategy, execution, and the long-term opportunity, we then decided to invest. Now, in finding and investing in these kind of new and young companies like Free, I think the fact that we have a large team on the grounds here in Tokyo can be a very big advantage. Now, we have a mid and small cap specialist team here that has met every single newly listing IPO company for more than the past decade. And this is a great asset for us to be able to build our knowledge on all of these new young companies from day one. Also, as we have a large team, we can have different team members go and meet each company and discuss different views within the team. Now, the fact that Japan is a few years behind on digitalization can actually be a great opportunity for us because we can look at what's happening overseas and look for potential equivalents here. And in fact, I think that the fact that we can utilize our broader JPMorgan global platform is also a big advantage here. Now, in Free's case, our Tokyo analysts covering the stock worked together with our overseas analysts covering Zero in Australia upon initiation. Now, Zero is also in quality rated stock, and they're basically 5 years ahead of Free. And the past growth track record is also very similar with where Free stands. So with that, I'll hand it back to Nicholas.
Thanks, Miyako. So the JPMorgan Japanese Investment Trust is a best ideas fund. If we don't like a stock or a sector, we won't own it. And when we can find great ideas, we are happy to back that conviction with high weights. We can go across the entire market cap spectrum to find the very best ideas. Investing in the way that we do leads to certain performance characteristics. So I would like to talk a little bit about this. Firstly, because we're unconstrained and best ideas, we look nothing like the benchmark. And on a day-by-day, month-by-month view, year-by-year, we can produce a completely different return to that of the topics index. There's also certain environments which are relatively better for us. 2019 was a very good year. We outperformed by 11%. It was a year where global economic growth was fine, a bit muted, and companies which really delivered on earnings were rewarded. 2020, although it was a very difficult year for many of us personally, it was a very good year for the performance of the trust, and we outperformed by 33%. That's because in the beginning of the pandemic, people were very worried about balance sheets, would companies would disappear, whereas we prioritize high free cash flow and strong balance sheets. So the companies that we have did well from that point of view. And then there was a real acceleration of existing trends, whether that be in things like e-commerce or cashless payments or automation. And because we think out 5, 7, 10 years, we already owned these types of companies when they got a big boost from what was going on last year. And that's why performance was so good. And this year, as we've seen the vaccinations and then a recovery, performance hasn't been quite as strong. Now, I would always expect us to struggle at points where the economy suddenly turns around. We've seen that before, for example, just after the Lehman crisis. And when that happens, you often don't want to own the very best companies like we pick. You might want to own the very worst companies because suddenly they're not going bankrupt anymore. And you get a kind of repricing of that type of company. But these periods are normally quite short-lived. And actually, although we show here that year to date at the end of September, we're underperformed by 5%, if you fast forward up until today, we've outperformed in the last 6 weeks by around 4.5%. So for the full year, for this calendar year, actually, we're very similar return now to the benchmark, which I see as being a fairly good outcome given how strong things have been over the last couple of years. I also say that I've been the lead manager for now over 10 years. So the entire track record has been generated by me, and then more recently over the last few years together with Miyako. And you can see that over the long term, we've managed to rate very good returns of over 5% a year, ahead of the benchmark for 10 years, and over 3 years, more than 11% per year. So to bring it all together on the final slide here, this is a high conviction concentrated portfolio. We go across the entire market cap spectrum. Dave, you could turn the slide maybe, go across the entire market cap spectrum. But we have quite clear growth and quality tilt within the fund. All of the fund managers and analysts are based here on the ground in Tokyo. It's a tremendous advantage with the little sell-side coverage that Miyako was talking about. Also, Japan is shut to visitors effectively. So if you've not been based in Tokyo, life has been quite difficult from an investment point of view over the last more than 18 months. We have 5 stars from Morningstar, silver rating. We're also the only investment trust within the peer group to have 5 globes for our sustainability ranking. And of course, most important of all, over the long term, our performance has been very strong. And when you take all that together, you can still get access to the trust trading on close to a 6% discount. That's something we're working very hard alongside the board to close. And it has been coming in over the last few years, but hopefully we can continue to see good returns from the Japanese market, better returns from the JPMorgan Japanese Investment Trust, and at the same time, you will see the discount to NAV close. So it should be a very good combination for our shareholders.
Well, thank you very much from both of you. We've been getting some questions coming in now, so I think we can let's dive straight in and see what we've got so far. So, first couple of questions, very much thinking about the pandemic, and one of the questions I'll just paraphrase really, basically flagging how the view that a lot of us might have of Japan and very congested commuter services, etc., marries up with how well Japan coped with COVID, particularly in the cities. Was there a kind of a restriction on travel, etc., as well that that helped to kind of control that? Obviously, we're very used to seeing on television subways, which are very packed with quite a lot of people. So even with masks, I imagine it would have been quite something.
Sure, thank you for the question. I can take that one. Well, you're absolutely right about that image of commuters being packed in trains here. And I was also commuting in a train where I could barely see my legs pre-COVID. But now we don't have that situation right now under the pandemic. I think corporates have been making efforts to allow more work from home or flexible work hours to try and avoid rush hours. So it certainly doesn't look like that right now. But I have to say it was difficult at first here because a lot of companies in Japan had been underinvesting in IPT for many years and didn't have the infrastructure in place to quickly allow work from home right away. So I think major corporates have kind of been adjusting over the past year and a half now. Though still, I think the need for the increase in IT services is something that's become very clear under the pandemic. I mean, I think it's really been a big wake-up call for corporates. And it's really a structural trend over the long term that I'd expect some of our IT service-related holdings like OBIC or Nomura Research Institute or Bengoshi.com, Henge, will continue to benefit over the long term.
Thank you. And another question on the pandemic was just interested in the stats that Nicholas mentioned about 6 cases. Just wondered whether reporting was particularly good in those areas. Had it been, I think the question really says is that there's a view that statistics coming out of Japan sometimes get taken with a pinch of salt. Is that still the case, or was it? Are they very much on focus with their COVID reporting?
I think there are some legitimate questions over exactly how accurate some of that data is, but there are some things that I'm very confident about. Like, I'm very confident that Japan is close to 77% vaccinated. I'm very confident that the number of COVID cases is very low. Now, it doesn't mean that it's necessarily 6, it might be some other number, but it's definitely very low. And the reason I'm quite confident of that is because we know what's going on in Japanese hospitals, we know how busy they are, we know, are they being told to free up beds for COVID patients, which they were around the time of the Olympics when there was a very big spike here in the number of cases. I also know that, you know, when I speak to my family and friends back in the UK, a lot of them have had COVID. And it's not even an out of the ordinary thing anymore. And here, I still don't know anybody personally. It doesn't mean that there aren't people who are getting it. There obviously are, but it's quite a different dynamic. So although the data might not be completely 100% accurate, I'm not sure it would be anywhere, to be honest. I think that the broad picture is accurate, that the vaccination has gone very, very well. We have none of that drop off, you know, as more people got vaccinated here. And I'm also very confident that, at least for now, the number of cases across Japan is low.
Thank you. There's one more question on that topic. Has COVID given a boost to tech as it has in the West?
Yeah, I think it definitely has. The key difference is that Japan starts from a much, much earlier stage. So when you think about e-commerce and how everyone in the UK or anywhere else was at home and you start ordering things on Ocado, but there's no slots available and all of those things that happened. In Japan, we start off from a much, much earlier point. Even as we sit here today, hopefully in something of a post-COVID world, you're still looking at less than 10% of shopping being done online. So you definitely got a boost, but we came from a very, very early stage. And it means that we have a very good growth runway from now on. You see the same thing going on in things like cashless payments, like still in physical retail stores in Japan, you know, around 75% of transactions are in cash. Whereas I know, like back in the UK, it's often like contactless payment, and they just increased the limit on contactless payments in the UK. But here, you know, it's a much, much earlier stage. So we can kind of see where we're going because of what's happening in Korea, China, Western Europe, the US, but we haven't really got there so far. And that's actually a very powerful way to pick stocks. In the business connectivity that Miyako was talking about with free, one of the big trends there is that companies in Japan traditionally built their own systems and did everything in-house, but the people who did that are getting older and they're retiring. So companies now, they're not only because of the pandemic, but because of demographics, they're forced to make those changes and really come into the same world that you know, the UK and other countries are in.
Okay, so following on from that, if Japan is behind on the internet, how is it positioned with regard to mobile internet such as 5G and also internet in the home, for example, fiber broadband saturation?
Well, Japanese network coverage is outstanding. Yeah, the wireless, the speeds of Wi-Fi are probably as fast as any country in the world, maybe with the exception of Korea. It's ubiquitous. Japan was virtually ahead of the curve in terms of getting internet connectivity via mobile phones with a technology that the big telecom company here called Docomo had called iMode. Now, it's a shame they didn't go on to capitalize on that and build an iPhone and everything that went with it. But it's very well established here in terms of technology. In fact, I would say better than almost any other country in the world.
Thank you. I think we've talked quite a lot about this, but there is a specific question where the portfolio seems to have a high allocation to internet stocks, which haven't done particularly well this year. What's your thinking around these? Well, obviously you've been talking about how that saturation is pushing ahead and market shares, etc., increasing.
Sure. Yeah, you're right. Some of the internet names have not done well this year, and these names performed very strongly under the pandemic last year. I guess also in environments where the focus shifts to reopening and macroeconomic recovery on a short-term basis, economic sensitive names or cyclicals, which struggled last year, can have the stronger rebound in the short term. But basically, our view on these stocks remain completely unchanged, and we're very happy to have high exposure in the internet space. And we really strongly believe that this is one of the biggest opportunities here in Japan. And I won't repeat on what Nicholas just mentioned, but whether it's in e-commerce or cloud software services or cashless payments, or it's just, we are still at a very early stage, and COVID has helped to accelerate these trends, but we expect these to be structural long-term trends that will continue in future.
And how far do you think Japan is behind in those situations, in those areas?
And I think overall, like, for example, if you looked at cloud software services, we are around 5 years behind in terms of penetration versus the West.
Okay, thank you. Right, get to a couple of more general questions. On corporate governance, why is there so much cash on corporate Japan's balance sheets? And what do you think will happen there?
Sure. Yes, as you point out, corporate Japan's balance sheet is very strong. In fact, it's probably too strong, with 50% of non-financial companies in net cash positions. Now, if you look at the equivalent figure in US or Europe, it should look more like 15 to 20%. And the insufficient balance sheet and poor capital allocation has historically been weighing on corporate Japan's ROE levels. But as Nicholas mentioned, over the past few years, these corporate governance issues have been making a lot of progress, and it's a very important theme here. So we see these improvements in shareholder returns, focus on ROE, profitability, improvement in board structures, etc. Now, we're obviously coming from a very low base here, but we're clearly heading in the right direction, and we expect this to be a long-term story.
Yeah, thank you. And with Japan now starting to ease restrictions, do you envisage changing the portfolio at all to benefit from those reopening beneficiaries?
Well, the short answer is no. And that's because, as Miyako talked about, the single biggest question we want to answer is, do we want to own this company in the long-term view? We want to own companies with outstanding outlooks of 5 or 10 years. And in the way that we analyze things, it means companies we give a premium or quality rating to. Now, if you go back to March and April 2020, when the world was kind of coming to an end, and we were in the darkest days of the pandemic, that gave us big opportunities to buy companies that we kind of been waiting for, but were worried about their valuation, like Tokyo Electron, which is global #1 in many things in semiconductor production equipment, and the Nomura Research Institute, both quality rated stocks for us. And we had that opportunity and we could take it. And those companies have been great contributors for us over the last 18 months. However, the same is not true on what is called the reopening trade, because many of those companies have got big issues from the beginning. So to give you an example, if you look at something like railway companies, their passenger number has dropped throughout the pandemic. And now we reopen, we'll almost certainly rebound to some extent, assuming that working from home doesn't take off in a really significant way. But all you're doing is rebounding back to a declining trend line, because the population here is falling. So passenger number on the train is very difficult to get an increase. Or if you look at something like printing, lots of people, have now got used to looking at things like we are now, looking at a presentation on a screen. You don't print it out. And so, yes, people go back to the offices, but when they go back there, will they print like they used to? And that was happening before COVID anyway. So for companies that are leaders in printing, and there are a few in Japan, in fact, the world leading companies in printing in that area, all you're doing is rebounding to a declining trend line. And that is not interesting for us. What we want is the companies with the most outstanding prospects on a multi-year period.
I see, thank you. A general question, I guess this is really asking about how it says, if this is a best ideas fund, is the portfolio biased towards lower or higher quality stocks? How did it perform? I guess it's really asking the question whether or not the value recovery would impact the portfolio. Is there a kind of value trait or more of a growth trait to the portfolio?
Well, this portfolio definitely has a growth and quality bias. And I think that when you look in 2019 or 2020, you can see that those were years where growth and quality globally we're doing pretty well. In fact, the last 10 years, you might even say that. But I think it's interesting to focus on this year, where you've seen in the first 4 or 5 months of the year, a strong move into value. And when you buy value in Japan, what you've got to think about, what does it mean when you buy value? Well, you buy things like banks, cars, steel, shipping. Like, do you want to own those on a multi-year view? Now, I'd argue a lot of those have, we can talk through them if you want, or some of the issues, but they have a lot of quite serious structural issues. And I also think it's interesting that that trade, and I think it is a trade into value, worked well for, you know, the first half of this, and actually has not been doing well in the last few months. And that, I think, is because on any sensible time horizon, I mean 3, 5, 7, 10 years, where you want to invest in Japan is actually quite obvious, and it's not really in those more value areas.
A couple of questions on ESG I think we can probably bring together. The first one was asking what the Sustainability Globe is and who it's awarded by. And then also, can you explain how you actually incorporate ESG into your investment process?
Well, the Globes themselves are awarded by Morningstar. So it's you can go on their website and actually you can get the screening of, you know, how many stars does each Japan Trust have, how many Morningstar Globes for ESG do they have, how are they rated on a gold, silver, bronze scale. So that's where all the data comes from. And I'm going to hand it over to Miyako to explain about how we incorporate ESG.
Sure. Perhaps maybe we can go back to the process slide that I spoke about earlier in the presentation. So how we incorporate ESG in our process. Now, as I mentioned, strategic classification is the most important part of our process. And this is where we classify the companies into premium, quality, and trading. Now, ESG is a very important factor in considering these strategic classifications. So first of all, we have what we call a risk profile checklist when deciding these classifications. And this is a questionnaire of 98 questions, of which 3/4 are related to environmental, social, or governance issues. And we fill in this checklist for every single stock under our coverage and make sure to identify potential risks around ESG for each company when deciding the classification. Now, on top of that, we also have what we call a Materiality Framework. Now, this is another proprietary framework where we score companies on 5 ESG questions that are particularly relevant to their subsector. So whereas the 98 question checklist kind of covers a broad range of more general issues, the Materiality Framework goes deeper into material ESG matters specific to each subsector. So, for example, maybe pollution related issues are very material for commodity-related companies, whereas it can be less material for a software company. And maybe for a software company, the issues we should be looking into deeper is more around data security. So through this risk profile checklist and materiality framework, we stay on top of any key ESG issues for each stock and discuss and engage with corporates on any topics that need to be addressed. Now, corporates, I feel through the many company meetings that we do, are much more willing to discuss these issues over the past few years, which is great, though we still will continue to push corporates in general to improve their disclosures around ESG.
And how likely do you think is it that Japan will reach the net carbon neutral target for 2050? And what would that mean to the portfolio?
In terms of how likely it is, on the current path, not that likely, because as Miyako said, the energy mix here is very, very wrong. I mean, it's dominated by coal, natural gas, and oil make up close to 70% of Japan's energy needs. But Japan has said that it will try to be net carbon neutral by 2050, and that presents a lot of opportunities. So we invest in the largest renewable energy company here in Japan called Renova. That's number one in wind power. It also has assets in biomass and solar. And because we're at such an early stage, it's a really exciting area to look at. In terms of actually hitting the target, the easiest thing Japan can do is to push harder on restarting nuclear power. Now, nuclear up until around 2010 made up more than a third of Japan's energy mix. But post the big tsunami and earthquake, the nuclear problems in Fukushima in 2011, most of those have been turned off. Now, turning them back on is a politically quite sensitive issue. And although the government may want to do it, a lot of people don't want it to happen, but that would be the easiest way for Japan to go about doing it. But regardless, we think that, it throws up a lot of quite exciting investment opportunities.
Yeah, thank you. Actually, there was a question on nuclear. You very kind, that very nicely fitted through. So thanks for that one. It worked very well. Right, a couple of more general questions. What do you think about inflation in Japan? How does it impact the portfolio?
Well, for as long as I've been looking at Japan, which is quite a long time now, inflation, it's been very tough to get inflation on any sustainable basis here. Right now, there is some what we call cost push inflation. So obviously commodity prices are going up all over the world. Japan has no raw materials, no energy of its own at all, which actually, as a side point, means that renewables will be very attractive because only Japan would become a bit more energy independent. So that causes an issue because it functions as a tax on the everyday guy, man or woman on the street. But we don't really see really strong inflationary pressures. For example, we don't see real estate prices jumping significantly here like you see in other countries. We don't really see any wage pressure at all to speak of. And we really do talk to an awful lot of companies. We're doing 4,000 company meetings a year here. So I think, we'd pick it up in some areas if that was an issue, and we don't see it. It could be an issue for companies, Japanese companies operating outside of Japan. And that's why I think it's so important to have these premium and quality rated companies. These are the very best companies in the world. And it means that they've got pricing power. So when, raw material costs are going up, they're able to pass it on. Or maybe they're part of the solution. Like if you think about Keyence, which is a very big holding for us and has been for 10 years in factory automation, if companies have got a serious wage inflation problem, one of the things they can do is to try to automate more of that production. They're global number one, they will be a big beneficiary. Or Recruit, the stock that I was talking about, because they're involved in the labor market. If wages are starting to go up, of many people start to change jobs, they are a direct beneficiary of that. So, there's what's going on overseas and there's what's going on in Japan. But I think that we are well on any, again, sensible time frame. 3, 5, 7, 10 years, I think that the companies we have are well positioned to deal with any inflation should it come about.
Mm-hmm. And actually, there was a question on Keyence. Could you give us an update on Keyence? It's had a tough first half. Did you take any action on it?
Sure, thank you. Keyence continues to be one of our top active bets in the trust, and it has been for a very long time. And we haven't made any changes there. Now, it's true that the share price performance saw some correction earlier in the year, but we don't see this as anything more than a reversal after a very strong year in 2020. Now, we only have about a dozen premium rated companies in Japan, and Keyence is one of them. They really tick the boxes in terms of characteristics that we're looking for in companies. So they're global number one in a structurally growing industry, high profitability with OP margins north of 50%, an aggressive performance-based incentive structure, which is actually not that common here in Japan. And we really don't see any change in that long-term outlook and are happy to continue holding it as one of our top bets.
Thank you. I know time is moving on a bit, so I think what we'll do is we'll just pick up 2 or 3 more questions and call it at that. But let's start off with what is the impact of slower China economic growth, and how are you thinking about China in general at present?
Sure, thank you. I'll take that one. So on the topic of China, it's clearly a big focus for the market. And it's a big focus in terms of regulations in some industries, competition among locals and foreign players, and of course, overall outlook for the economy. Now, just as a reminder, Japan has a very close relationship with the US, and China is also very important for us as our biggest trade partner. Now, I think the most important area for us to monitor is competition versus local Chinese players under a Buy China policy. Now, this isn't an issue just for Japanese companies. It's an issue for all multinational companies. And in many cases, there is some kind of Chinese alternative to your product. I think in some areas, the risk is higher than others. For example, in industries like construction machinery or steel, where there's quite a clear local option there, I think things can be quite difficult. Now, on the other hand, though, there are some companies like sensor maker Keyence and bicycle component maker Shimano who have very, very strong global positions and aren't as easy to replace. So I think ultimately for us, it comes down to the importance of us continuing to focus on the companies with clear competitive advantages, the premium and quality names which aren't easily going to see their market share fluctuate due to political situations or forex movements. And that's exactly what we're trying to achieve in this trust.
Thank you. What is your view on the banks? Somebody's flagged that they didn't see any exposure to this in the portfolio. What is your view on the banking sector in Japan?
I think the banking sector is a very, sorry.
Go ahead.
Banking sector has a very tough outlook for Japanese banks. We have no exposure to them. The key problem is that consumers, a lot of them are older, they don't need to borrow money. And a lot of companies, they have net cash positions on their balance sheet. They don't need to borrow money either. It's very highly competitive and interest rates are basically zero. So very, very hard to make money. And they also have some of the most antiquated systems of any companies that we come across. So we have zero, and I'm very happy to have zero.
Thank you. On corporate governance code changes, have they had a meaningful impact? If so, are you doing anything to try to capture the benefits of these? And specifically asking the question whether or not you would take actions such as ABI Japan has in their approach to some of the corporate companies they invest in.
Well, we have a dedicated ESG team based here on the ground in Tokyo, and we're engaging with companies all the time. I think that we are engaging and want them to do the best they can and move in the right direction. And we own several companies that could be of interest to people who want to take a more active approach. And we certainly would encourage these companies to do things as well. For example, Nintendo, Keyence, SMC, these are very big positions. They will have very large net cash positions. We would like them to do more with their balance sheets. We're certainly encouraging to do that. Some of these companies do have activists on their board. But I think also at the same time, we want to make sure that we own the very best companies. When companies are reorganizing and trying to sort out some of the issues, we don't want them to be rearranging deck chairs on a sinking ship. We want at the end of it to be something exciting and great growth prospects over the long term.
Thank you. Two very quick questions then to finish off on. First one being, as this is a UK investment trust investing in Japan, do you have any consideration for FX in the investment process?
Well, the main thing is that when we look at companies, we want them to be very strong companies with great competitive positions. And that means that they are able to cope with movements in the currency, whether that be weak yen or strong yen. They have that pricing power. So that's basically how we think about it, rather than taking an explicit view on the currency. And certainly in the time I've been managing, we've never hedged the currency. And I think it's very unlikely that we would ever do that, because I don't think that that's where our strength lies in finding these great companies.
Yeah, thank you. And last quick question: how long has Miyako been co-manager for?
Sure. I have been co-manager on the trust from May 2019, so 2.5 years now. I joined the firm in 2013, so I've been at JPMorgan Asset Management for around 8 years now. Now, we are obviously work from home right now, but when we were in the office, Nicholas and I sit next to each other. Still currently, we obviously talk every day through Zoom and chat and talk about stocks and ideas. And we do all company meetings together, and we work very closely together.
Well, let me just say, Miyako is extremely modest, but since she was named in the trust in beginning of 2019, our performance has been very good. She also manages some of our open-ended funds together with me for longer, and that resulted in her being voted by Citywire as one of the best performing top 30 female investment managers over the last 5 years because of the consistency of her performance. So I'm incredibly happy that she's working together with me on the team.
Super. Thank you very much. I think we'll end it there. It's gone 10, but thank you so much for your time this morning, both of you. It was very interesting to hear from both you, Nicholas and Miyako. If there are any other questions that anybody would like to have answered by the managers, you can please send them to me at dm@martenandco.com, and I'll get them returned to you. But that I think was a time for today. So thank you all once again for joining us. Thank you to Nicholas and Miyako for their time in sharing their thoughts on the fund.
Thank you, everyone.
Thank you, everyone.